Tushar Bansal. He tracks oil very closely at FGE. He's joining us on a phone line from Singapore. Tushar, what would be your view? The spike in WTI versus Brent, is something changing in the sector drastically?
Two things are happening. First of all, the expectation that with the low oil prices, U.S. production will drop. That is contributing to an increased pull on WTI. And secondly, the announcement that U.S. crude exports are likely to be approved. Now, that is not yet a done deal. It will take time, but the expectation that it is likely to go ahead means that there is room for U.S. crudes to be exported and, in turn, more crudes to be imported. So overall, what it means is that WTI is now expected to link more closely with the international markets. Now, structurally, I don't expect that TI will start pricing at a premium to Brent structurally, except for short periods of time. But we're going to see a much closer value. We are not going to see a return to a $5 discount or $7 discount. We're going to see much closer values going forward from now.
Right. Should that be taken positive for the sector development?
It doesn't really impact sector development. It really impacts the U.S. refiners who have been used to WTI pricing at big discounts, which in turn was leading them to abnormal profits, if I may use that term. So that is going to go away. On the broader economy, it's not going to have much of an impact.
Right. And as far as the view on now Brent oil is concerned, what would be the view over there? Essentially, it would follow WTI, but the premium or the discount would be very narrow. That's essentially the takeaway from the development, right?
Absolutely. And Brent on its own is looking weak. The oversupply continues right now. We're expecting Brent to go weaker. The only thing in the very short term which could surprise us is a potential sudden winter. So if there's a cold snap or sudden winter vortex, that could in the very short term lead prices higher. But other than that, crude prices and Brent specifically is looking weak overall. And this will be exacerbated when Iranian oil returns to the market. We're expecting an increase in Iranian exports starting next year in Q1 and Q2, and that is going to lead Brent lower.
Right. How would you look at some of the global banks now giving a target of $20 for crude? Is that realistic?
We expect late 20s, not really 20 at this point of time. It's currently in mid-30s. We expect it to go lower, and the first step would be around mid-30 or low 30s, and that is for Q4 of this year and Jan. But after that, it starts pricing weaker because the peak winter season starts coming to an end. So we expect it to price in the late 20s, but not really go down at this point of time in the low 20s, because at that point you start severely impacting the operational expenditures of a number of fields. So total production is likely to be impacted.
Right. Tushar, thank you so much for taking out time for us. Always a pleasure talking to you.